How's it going, everyone? Mario here. We had a jam-packed week. Banks collapsing, CPI, PPI, Fed rate hikes or Fed rate cuts or whatever it is. But the markets are still up 2% on SPY, 7% on QQQ, and flat on Russell 2000 for the week. I really wonder where these doomsday callers are. Oh, it's just like 2008. No, it's not. Shut the up. Most of my audience are new to the markets. Most of you are either a day trader or short-term traders at best. Even if you are a swing trader, from a technician standpoint, you gotta ask yourself, what makes you money? Price does. It'll be better if you focus on that stuff that makes you money, aka the price, instead of drowning yourself with all the narratives. Me, as a finance YouTuber, I'm gonna let you in on some secret. You gotta understand, if I put bank collapse and some nasty bearish title in my video with a shocking face in my thumbnail and pretend to be a bank expert, hey, I'll get more views. Though I believe it or not, I can just put the title and ramble about some nonsense to mislead and instill fear upon my audience just to get views and make more money. Oh, the banks are collapsing, guys. This is what's happening. It's just like 2008. Think about it. How many finance YouTubers have you seen milking the situation for more views? Literally every single one of them. Focus on the price. As a technician, that's all matters. The narrative changes based upon what the price does. It's not your job to analyze why the price moved. It's your job to manage your risk on your portfolio and react to whatever happened with the markets. With that being said, we'll go over the price action on SPY and QQQ, and I have opened some swing positions this week. We'll go over that as well, and we'll go over the watch list too. We're looking at the daily chart of SPY. I've anchored the Avwap from the 52-week lows in October and the year-to-date anchored VWAP from Jan 3rd and one from the all-time highs. We are still in a choppy, range-bound, directionless type of markets. If you go to the monthly charts, you can clearly see for the past 5 months the range of SPY is in between 375 to 408. As Brian Shannon says, if they don't scare you out, they are most likely going to wear you out of the markets. If you're trading this daily, you could have been overwhelmed with volatility. But if you take a step back and zoom out a bit in longer time frames, it makes sense that the markets aren't doing anything and just trading in a big tight range. Now moving back to the daily charts, the Thursday's candle is something to note. What we had on Friday is what we call an inside day, which means the opening and closing price on Friday is within the body of that big candle we had on Thursday. I won't be surprised if this range continues for quite some time till we get some clarity or certainty. You can see the volume is slowly deteriorating here as well. I heard a thesis from Michael Noss which made sense. Institutions slowly move to the sidelines until they actually get clarity from the markets. Thus, you're seeing this wild intraday swings with no direction. We might get some clarity after Wednesday after the FOMC rate hike decisions. Oh Mario, but you said focus on the price. People always misunderstand when I say this. I got to clarify. Events like this are important. I'm not saying don't pay attention to the market moving events like earnings report, jobs data, CPI, PPI, FOMC rate decision, etc. These are classified as risk. These events can move the markets. It's difficult to assess the risk as you don't know how much the markets can move. You don't know where to set your stop losses. Thus, holding positions through them becomes a big gamble. We don't care what the data said and waste time on analyzing the data, but we do care about the reactions of the markets after the data has been released. If the market reacted positively, we can plan accordingly to the trade to the upside. If the markets react negatively, we can plan accordingly to the trade to the downside. Focusing too much on, oh, the data is bad, when the market is pushing higher and vice versa is such a waste of time. Maybe you're the one reading the data wrong. Don't blame the markets for your own incompetence. Markets are right most of the time. I've color-coded this Avwap which we had, so it'll be easier to understand which one is which when we move on to the smaller time frames. The green is coming from the 52-week lows, the yellow is the year-to-date anchored VWAP coming from Jan 3rd, and the red one is the all-time highs AVWAP coming from all the way at SPY at 480. Now let's move on to the smaller time frames. Now if I switch to the 15-minute charts, you can clearly see the market, even though they pulled back, they held on to that 5-day moving average. Markets bounced significantly from that 380 lows last week with a decent volume, making that area a level of interest. We're going to anchor the lows of Monday's opening print. You can see where they found support throughout the entire week. This will be the weekly anchored VWAP, and we're going to leave this on the charts until it got violated or it provides us no importance. This also coincides with the 5-day moving average as well on the 15-minute charts. The range of this Thursday candle is from 386 to 396, a $10 range. As long as the price stays above this positively sloping 5-day moving average, which is at around 390 range, possibility for SPY to run a test to the 52-week lows anchored VWAP, which is around 391.70, is higher. Anything above it, we can expect the SPY to fill this gap at around 396. So, to recap, the longer the price stays above the 5-day moving average, which is positively sloping about 389.63, there is a decent possibility for a bounce to the upside to fill that gap and to test that year-to-date anchored VWAP, which is around 397.65 as well. I'm not going to be too bearish here as long as the price is above the positively sloping 5-day moving average. If you're long the markets, your stop goes here at the 5-day moving average or at the lows of 389 range, provided we didn't gap down on Monday. As the markets push higher, you can keep moving the stops higher as well for every higher low the market makes. The bearish scenario will be bulls failing to hold this weekly anchored VWAP from last Monday and losing the 5-day moving average. That tells you the average market participant who went long last week is actually losing money and will accelerate the trend to the downside. In that case, if you're short the markets, your stop goes at the 5-day moving average, which will be negatively sloping on a gap down, and you can just move your stops lower to every lower highs it makes to the downside. Have a proper plan before entering the trade and respect your stop losses. Watch the live stream that's linked down below in the description to know more about how I go about setting the stop losses on every consequent higher lows or lower highs. It gives you better control on your position and prevents you from getting stopped out early from your trades. QQQ is looking way better compared to that of the SPY because of its less exposure to the finance space, which got rocked last week. It's above the 52-week low anchored VWAP, it's above the year-to-date anchored VWAP, and it's way above the positively sloping 5-day moving average. This is the type of chart where you buy any pullbacks on. If they do reverse down to 300 or 298 next week and find strength, keyword, find strength. We do not buy the dip blindly, we buy the strength after the dip. Let's say they pull back all the way to 297.60 and bounce to recapture this 5-day moving average, which is currently sitting at 298.75. Your stops will be at the 297.60 lows, and you move the stops higher for every consistent higher lows it makes. QQQ still remains bullish considerably compared to that of SPY, so I would be cautious shorting the strength right now. Wait for the weakness. We don't call the tops blindly and then go short. That's how you blow up your entire account. You short the weakness. Last week, Nvidia should have been a nice lesson for everyone. You shorted blindly and you got absolutely destroyed. I see people still trying to call the top on Nvidia and buying puts on it. Let them take as much as risk as they want. We wait for confirmation. We wait for the weakness before going short on a stock. You gotta understand, these are the same idiots who asked everyone to sell when Nvidia is at 232 because PE ratio is higher. Now Nvidia is at 260. Do not short uptrends blindly. That's how you blow up your accounts. Short the weakness. Do not short the strength until and unless you have the confirmation from the price. I had opened some swing trades for last week. We'll talk about it briefly. The first swing trade which I opened to the upside is XLF. The amount of bearish bullshit which you see online on this is absolutely insane. Oh, it is just like 2008. Anyone who researched what happened in 2008 with half a brain knows that this is no way similar to that of 2008 financial crisis. 2008 was a fucking hurricane. This one is pretty vanilla. This is a contrarian trade. When everyone is talking about it's just like 2008, I want to drown the narratives and focus on the price. XLF is sitting at 2008 pre-crash levels, 2020 pre-crash levels, bucking to it as support. I took an initial risk with one contract of June expiration with 31 calls on Wednesday with stops at 29.50. I completed my position on Thursday with my stop losses moved all the way to the Thursday's lows, which is at around 30.90. If they lose 30.90, I will get stopped out for a 60 to 70 cent loss. If not, this might possibly be my best trade of 2023 so far, as I'm expecting at least $4 to $5 move to the upside as the banking situation gets resolved. The risk on this trade is another bank going belly up. If that's the case, I'll get stopped out for a small loss and look for re-entry again later. My risk is defined and it's relatively a very small position so far. The situation right now is kind of over amplified by these news outlets. I don't think this is nowhere similar to that of 2008. I don't want to talk a bunch of nonsense. I want to put my money where my mouth is. I will be happy to be wrong, and I will be happy to cut it for a small loss instead of just yapping about how bearish things are or how bullish things are. I believe this will blow over soon leading into April, as these news outlets will find something else to cover and the markets will blow this out of the water and start pushing higher. This is just a thesis for now, and I will buy more if I find strength on this sector back. One of those buy the fear sort of thing. If you don't know how to properly manage the risk and work on your stops, regardless of which technical analysis indicators you use, you will still lose money. If you want to surround yourself with traders who puts risk management first before everything else, go ahead, check out the Patreon. Link is down below in the description. With that being said, take high probability trades, manage the risk wisely. I'll see you guys in the next video.